Get started. Welcome and thank you for joining today. In the next half an hour, we're going to talk about money your hotels have already earned but may not have collected yet. My name is Linda Girrbach and I'm the co-founder and head of hospitality consulting at RobosizeME. Let's get started. Before we talk about that number, I want you to picture the person at the other end of it. It's a Tuesday morning at the front desk and checkouts are done. The lobby is quiet for an hour and one of your front office agents opens the OTA portal, the PMS or inbox, depending on what the system of truth is, and starts working through virtual card payments one by one, matching each to the folio. Is the amount right? Was it charged? Did it go through? Hundreds of them. And by the time they finish, if they finish, half the morning is gone. Not one guest has been helped, not one problem solved. And that is the work hiding behind the number I'm about to show you. So this number on this slide, for one OTA, which was Expedia, one portfolio of 11 hotels in 1 month. We found $228,000 in virtual card balances that had not been processed yet. Now, would that money eventually have been collected? Probably most of it. Some of it correctly, some of it with errors along the way. But the question is when and at what cost? At each of the 11 hotels, someone on the front office team would have had to work through every one of those transactions by hand. For example, a 150 ADR over a minimum length of stay of 2 nights. This equals 761 reservations, and that's roughly 69 per hotel. And let's assume each takes 2 minutes to process. This would have taken each hotel about 2.3 hours. So that's 2.5 hours for a front office agent where they just stare at a screen. Multiply this for other OTAs and always remember that a human also makes mistakes. The most costly mistakes for virtual credit cards are undercharging the cards. And depending on how busy the hotels are, the cash might have sat there for weeks, maybe even longer. Today, I want to show you where that backlog builds up, what is actually costing you and in time and in cash flow, and how to get ahead of this. My aim is to equip you with enough to judge whether this fits your properties and to see exactly where it would catch revenue you're losing now. By the end of the next 30 minutes, you will know where OTA virtual credit cards revenue actually leaks, how much it is likely costing your properties based on real math you can run yourself, and what automated reconciliation does, and what a recovery plan would look like for a hotel like yours. For those of you interested in exploring this automation for your properties, stay until the very end. After our Q&A session, I will then tell you how to best reach out to us. And after the webinar, we are going to share the recording, as I said, and also the slides I'm showing you. And since we are a small audience today, feel free to ask me questions anytime by typing them into the Q&A. Which you should see on the right-hand side of your screen. I'll try to answer them immediately. Let's dive in. The reason why I have chosen this automation for today's webinar is because there are 3 things that are converging on hotel operation teams right now. Firstly, OTA share is growing. Virtual card payments are now the default settlement method for Expedia, Booking, and most major OTAs. Secondly, front office teams have not increased in size, if not even the opposite. Fewer people are being asked to reconcile more transactions across more channels. And lastly, margins are tighter. A 1 to 2% revenue slip that nobody used to notice is now the difference between making budget or missing it. In summary, the work is still there. As a matter of fact, it's increasing in volumes. The team size is the same or even smaller. So let's look at what that actually means. You all know the OTA VCC lifecycle. Booking is confirmed, VCC is issued, folio posted in the PMS, hotel charges the card, OTA settlement window closes. These are 5 steps. The problem is not in any single step. It is what happens between them. So between issuance of the folio and the folio itself, the amount mismatches go unnoticed. Between the folio and the charge, the virtual credit cards gets charged for less than is owed, or not at all, or only much later than when it actually could have been charged. And between the charge and the dispute window, by the time anyone looks, it is already too late. A new virtual credit card has to be requested, and this can be extremely time-consuming for your operational staff. In summary, each step looks fine on its own. The problem only shows when you put them side by side, and nobody has time to do that every day. There are 4 failure modes we see in every portfolio, and you and your teams will probably recognize all of them. The first is undercharged or never charged VCCs. The card was issued for $1,400, let's say, but only $1,250 was pulled, usually a manual data entry or interface slip, or a late charge that never made it into the folio. Then the second is tax and city fee mismatches. One 4-star hotel we worked with did not charge the full room's revenue to the VCC because there was a mistake in how the interface calculated the city tax split from the room's revenue. I'm going to reveal the real impact of this mistake later on in the session. The third one is foreign exchange and currency rounding gaps. So cross-border bookings settle in the OTA's currency, and small differences per transaction compound across thousands of reservations. The fourth is PMS and OTA status mismatches. The reservation shows as checked out in your PMS, but it is still active at the OTA. The charge attempt fails silently, and the dispute window closes before anyone notices. All 4 of them have one thing in common: they result in revenue loss. I want to be really clear about who this is not a criticism of. I've sat with finance and operation teams who are sharp, they're careful, genuinely good at their jobs. And they were still missing this, not because they were not trying, because you cannot ask 3 people to eyeball 40,000 of transactions each month and expect every €5 gap to get caught. The math just does not work. The problem was never the people, it was what they're being asked to do, sometimes by hand, and only a machine can do that at scale. This is not a competence problem, it's a structural one, and I cannot stress that enough. Manual reconciliation for one OTA at one property takes roughly 30 minutes a day. That sounds manageable. From a chain perspective, however, you need to multiply it by, let's say, 10 properties, how many ever OTAs you work with, let's say 3 OTAs, and 30 days a month. That is 450 hours a month before anyone has done any actual recovery. No team has that capacity. So the work gets skipped, sampled, or batched quarterly, and small variances turn into quarterly write-offs. The leaks are not dramatic, they are small and they're frequent, individually below the thresholds anyone would chase. Your team is not missing this because they're careless, they're missing it because doing it by hand simply does not work at that scale. Let me run through a realistic example, a 200-room property taking 20 OTA reservations a day on one channel. And at an ADR of $200 and a minimum length of stay of 2.5 nights, that is $10,000 a day in revenue being processed. Manual reconciliation takes about 20 minutes a day. At a 1% variance rate, and we usually see 1 to 2% even, you're looking at $3,000 a month in at-risk revenue. That is around $36,000 a year per property per OTA. Add in the labor cost of the manual process, and you're roughly at $43,000 in combined annual exposure. And that is the conservative version. The previous example was for one property, so let's scale this into a mid-sized group. The same calculations, 10 properties, 3 major OTAs, let's say Expedia, Booking, and Agoda. That would be $108 million a year in OTA VCC volume being reconciled. Recoverable variances at that scale is approximately $1 million a year. Operation teams freed up around 3,600 hours a year, which is close to 2 full FTEs. And direct labor savings, approximately 200,000, and annual value for a group that size is over $1.3 million. Even if I'm half wrong on the variance rate, this is still the biggest number nobody is currently reporting on. Now, let me show you how the automatic reconciliation works. The automation runs as a simple loop every morning. The bot logs into each OTA portal and pulls the previous day's VCC data, usually the previous days, but for some OTAs, there might be some variances depending on the OTA when the VCC can be charged. It then matches each transaction to the corresponding PMS folio in Opera Cloud, or your equivalent. It validates the amount, tax, currency, and reservation status, and where it can, it charges the full amounts or remaining balances on VCCs. And it generates a structured exception report for anything that needs a human. The important part is that it does not only find the gaps, it closes the ones it can automatically. This is not another dashboard for your team to watch. It is a bot doing the boring work on your behalf. So let's look at these steps using a simple swim lane diagram. On the left, you see the systems involved. Let's look at the flow as well as possible variances to it. So every morning it goes to the extranet, looks up the reservations to be processed, locates the VCCs and the amount that can be charged. It then logs into the PMS or accesses the data needed via API, so it does not necessarily need to log in. It locates the reservations, posts the revenue where necessary, charges the card, and closes the folio, also where necessary. This swim lane only shows you the actual VCC reconciliation, but in reality, there can also be other steps integrated into this one automation. This can be moving the virtual credit cards to another folio, so it doesn't get overridden with the guest's credit card up and check-in. Part of the automation can also be setting up routing or entering reservation comments or notes. You could even go as far as checking the correctness of the guest's name in the profile. For one client, we translate Arabic names to English, check capitalization, assign a language to the profile, change the salutation, and so on. But let's go back to our actual VCC automation. As a next step, the bot then creates the output report that summarizes everything the automation did. And lastly, sends the report via email to the hotels. And let's look at what that report looks like. What you see on this slide is a real client report, anonymized, of course. You can see that the work has already been done. Your team is reviewing only, not reconciling. You can see the auto-resolve transactions, the exception buckets grouped by failure type, and the no data list for reservations where the OTA did not return anything or someone should follow up. This slide shows you the difference between the manual and the automated process. Before automation, the reconciliation happens weekly or monthly, sampled at around 30 minutes per OTA per property, with whatever coverage the team can manage. With the automation, it happens daily. 100% of transactions are covered. You have a full audit trail and a same-day revenue recognition. Two rows in the table matter to finance leaders as much as the labor savings. The first one is the audit trail, and the second one is the timing of revenue recognition. So I will let you look at that slide for a second. Okay, just important to note, the work does not disappear entirely. The few cases that generally need a human, the teams get there faster and with context already attached. Let's look at two specific examples now. The first one I already mentioned briefly right at the beginning of the session. One portfolio, one OTA, in this case it was Expedia, 1 month. 11 properties reconciled automatically across the group. 7,559 individual VCC transactions processed, and that's around 43% of exceptions auto-resolved with no human touch. That's the $228,000 I mentioned in remaining VCC balances that were surfaced and queued for collection. Annualized, that is roughly 2.5 million a year for Expedia only, for the bot to process payments for. And one thing to be clear about, the 228,000 is not pure leakage. The majority of this would have been normal charges that are being charged in a timely manner. The automation just processes everything quicker, and the second, basically, the VCCs become available. And it's reducing human labor and making sure that these payments are processed at the right time. Okay, and let me tell you how this one actually came to light, because it shows how well these things hide. This was a 4-star hotel in Europe, mid-size, a lot of OTA business, a well-run property with a finance team that knew what they were doing. One day, someone on that team was looking at a guest folio, just a routine check, and something felt slightly off. The amount charged did not quite match what the guest had paid through the OTA. It was small, it was only €5, the kind of thing that is easy to explain away and move on from. But they did not move on. They pulled a second booking, same small gap, then a third, same again. What they had found was a configuration gap. The OTA was adding a 5% city tax on top of the room rate and collecting €105 from the guest. But the interface was only passing 100 into the PMS. So the hotel believed 100 was the full room rate, the full amount, tax included, and only ever charged the card €100. On every OTA booking, that €5 of city tax was quietly left on the table. Now, €5 sounds like nothing, but this had been running for more than 3 years, booking after booking. And when they finally sat down and added it all up by hand over several days, it was more than €100,000. They did get it back from the OTA, but only after a long back and forth, and only because one person refused to ignore a €5 gap. And here's the part I want you to sit with. With automation, that gap is caught on day one, not after 3 years. The very first morning, the bot sees 100 going out against 105 out and would flag this. Also, we are all familiar, OTAs would not report on undercharged VCCs, but overcharging is impossible. It's just a sad reality of VCCs and OTAs. So let's look at the operational transformation we usually observe when automating this exact process. Before automation, 1 to 2% of OTA revenue leaking, around 10 hours a month per OTA on reconciliation, exceptions spotted weeks after they happened. And after 90 days, leakage from the first quarter recovered, more than 40% of exceptions auto-resolved, same-day visibility on everything else. If you want to know what those numbers look like for your specific properties, please wait till the end of this webinar to find out about our workshops. I would like to leave you with 3 things to take away. Firstly, the leak is real and it's structural. 1 to 2% of OTA revenue hiding in plain sight in every property during manual reconciliation. Secondly, automation is not a dashboard. It is a daily bot doing the reconciliation work your team does not have capacity for, closing gaps where it can, and surfacing exceptions with context already attached. And thirdly, the fastest way to know your own number is to look at your own data. I was quicker than expected, a bit quicker. So are there any questions from your side? Waiting for the chat, maybe I get a few questions. We usually get questions like, how long does implementation take? And that depends on the OTA and your tech stack in general, the PMS, but the first OTA is typically live between 4 to 6 weeks. And a full multi-OTA rollout is 8 to 12 weeks, depending on your PMS integrations, as I said. It's all PCI compliant. Which OTAs are covered is usually also a popular question. We currently work with Expedia, Booking, and Agoda, and also most major other OTAs that issue VCCs. But definitely the 3 popular ones are the ones I mentioned. Okay, then I just move on. For those of you who are interested in what this automation can do for you, I would like to talk to you about our so-called OTA VCC revenue recovery workshop. The fee is $2,500, and if you go ahead with this automation build, all of that is credited to your first invoice. So think of it as step 1 of the project, not an extra cost. And 3 things come out of this. First, it's a 30-day VCC scan. We take a slice of your OTA VCC data and your PMS data, and we work through where the leakage is hiding in your property specifically. Second, a financial model, a real number for what you are likely losing each year and how fast automation pays for itself at your volume and OTA mix. And thirdly, an implementation blueprint, the concrete plan to deploy across your properties with roles, controls, and timeline. This is right for you if you run several properties with a meaningful OTA share, and if you own this problem, for example, a cluster controller, a front office manager, a finance or revenue lead. And you also need to be able to pull 30 days of OTA and PMS data for the scan. If you are a single property with very little OTA business, or your team is already reconciling daily with full automation, this is not the right fit. And I would rather tell you that honestly. And on the numbers, we kept the workshops each month so we can do each one properly. And here's the promise: if we cannot find at least 3 to 5 times the fee and likely annual recoverable leakage, you still walk away with a full map of your exposure and a list of gaps you can fix yourselves. So worst case, a free diagnostic; best case, a clear path to a multi-6-figure recovery every year. To book or show your interest, write an email to linda.girrbach@RobosizeME with the subject line workshop. I've got my email also here. So thank you all for joining today. The recording and the slides will be sent to everyone who registered. And if you want to book the workshop, as I said, just drop me an email, and I or one of my colleagues will be in touch shortly. Thanks for your attendance, and enjoy the rest of your day.